Good morning and welcome this morning to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined by my good friend Connie Hill, 20 plus year veteran of the financial market. She's out there in the chat helping to answer those questions as they come rolling in. For those of you that are here with us live, for those of you that are here with us in the recorded version, thanks for being here as well. Leave us a comment in the comment section. Welcome to all of you that are here on a regular basis. Welcome to those of you who are new. If you were in our advanced options workshop over the weekend in Santa Clara, California, and you got my invitation to come and join me this morning for Trading Futures, welcome to you. Thanks for being here. We're glad that you have joined us. I'll tell you what, it is Tuesday. It is morning. It is the beginning of summer, if you will. We're after the Memorial Day weekend, and driving demand is going up, and energy prices are all over the place. That's just, I think the nature of the way things are going. So we're going to talk a little bit about that. We're going to talk about what's moving at the moment, including the U.S. dollar. And we'll jump out into that discussion here really quickly. A couple of quick housekeeping items, though, as we get started. Remember that everything we talk about is simply for illustrative and educational purposes only. It is not a recommendation of any particular security or account or strategy or anything else. Remember that futures and futures options trading involves substantial risk. It is not suitable for all investors. Make sure that you read the risk disclosure statement for futures and options prior to trading futures products. Also, remember that futures trading requires a futures margin account, also known as a performance bond. Both an initial margin and a maintenance margin are required. Put that initial margin up to initiate the position. Maintain that position by using that maintenance margin. We'll talk about that as we get into this discussion. Of course, remember that investing involves risk, including the loss of principal. For some products and strategies, the loss of potentially more than your initial investment. So that's one of those characteristics of futures products, is that they can move very, very quickly. And because that movement can happen in a leveraged product, loss greater than that initial margin can happen. So that's something to be aware of. Also, when trading futures, remember that stop orders, or really any order, whether it's a buy stop or sell stop, any order that generates a market order can and may be substituted by the exchange due to their rules for an exchange designated limit order within a protection range, which means that an order that you thought might just fill at whatever available price might get rejected and not fill at all. So if you're trying to get out of a trade, that becomes a real problem. So we'll talk through that as we get into this discussion. Also, a couple of other things to pay attention to here. If you're going to look at or consider trading virtual currency derivatives, make sure you recognize that they involve unique and significant risks. Make sure you read the NFA Investor Advisory and the CFTC Customer Advisory about those particular products. And of course, we're going to do all of this in the Thinkorswim desktop software platform, specifically the Paper Money platform, which is a great learning environment. It does not, however, guarantee future success, and it doesn't do certain things. In fact, one of the characteristics of the Paper Money platform is that it'll typically fill right at the midpoint. It doesn't always, but it typically does, and that's algorithmically derived, whereas order fills in a live trading environment are subject to market forces. So we'll talk through that as we get into some of those discussions as well. Okay, let's jump over here and see what is going on this morning. I've already been kind of casting my eyes around a little bit. Before we jump into the dollar and the dollar futures here, I wanted to just quickly pop over here to the overall kind of futures grid, and we'll take a look at what is happening this morning. This is /ES in the equities futures. One of the things that I've noticed in the last little bit, I mean, obviously with this very, very strong run to the upside, there's one thing that I started noticing just a little while ago, and that is the size of these candles seems to be shrinking as we're getting up near, I don't know. I mean, is it a top? Could be. Doesn't have to be. There's nothing that says that 7,600, 7,700 have to be topping levels. But what I happen to notice is that those candles recently are getting very, very thin. We're not seeing a lot of range bound, or not a lot of movement outside the range of previous candles. In fact, that range is kind of shrinking. And yet, our RSI has been staying up in that upper portion of its range. The RSI, a technical indicator that simply is, if you want to distill it down into its basics, it's telling us where the price of the instrument is closing relative to the highs and lows. So it's still been closing closer to the highs. We've been seeing pushes to those highs, or at least upward closes, right? So some upward momentum, and that's kind of the indication that we're getting from the RSI. But really, since this point right here, when we saw this high just about the 75.45 mark, kind of the middle of May, to now, number one, there's been a little bit of a pullback, and then there's been a little bit of a rally. We're not significantly that much higher on the ES than we were, almost a month ago. But what I have noticed is, again, with those candles getting smaller, momentum does seem to be kind of falling off a little bit. You notice what the RSI is doing here at this point is we're starting to see maybe that little bit of a bearish divergence. Now, obviously, there's an inherent bullish bias, but that little bit of a bearish divergence, the fact that we're getting up to this point, we get another red candle. I mean, this is today at the moment. I mean, obviously, today hasn't closed, and there's a lot of news day yet to be had. But if we get another red close here, that's going to be the first one that we've had since really the 19th of May. And, that's following this big red close and that roll off a little bit. So lower highs in the RSI, bearish divergence could mean that we're starting to see the potential for a pullback. Doesn't guarantee it. Now, look, we've got JOLTS reports, we've got jobless claims, we've got non-farm payroll, or the jobs report coming out on this Friday. So there's a lot of data still to come, but we're past the majority of the earnings season. So earnings season maybe out of the driver's seat, now back to economic data and news driving the market higher, and fatigue, Kelly. You're absolutely right. Fatigue may be a part of this, right? This is buyer fatigue, maybe. Taking a look at the NASDAQ, though, similar kind of situation, stronger kind of upward trajectory, a little bit less, well, maybe a little bit longer bearish divergence going on here. Not quite as pronounced, but the same kind of thing. We've started to see those candles get a little thinner, but the 50 period's moving up and away from the 200 period. Still some movement there to the upside. RSI kind of ticking back down a little bit. So again, maybe some signs potentially of, I'll call it fatigue, not topping out necessarily, right? And then in the Russell 2000, obviously a little bit more volatile of a futures contract or an index here, but seeing a little bit of a potential bounce as a possibility, right? So it was a rotation. And I think this kind of follows that logical rotation. Out of large caps, they set the tone in the earnings announcement. Small caps then come in and start to pick up. But we've got a little bit of a bounce here with more of a bearish divergence in RSI. So the /RTY, the Russell 2000, and we'll take a look at the mini contract or the micro contract here in a minute. And see if that is something that is potentially tradable to trade this possible bull flag bounce. If that's the case, and we do get a kind of a bull flag bounce here, but this isn't always the case. We've seen these types of little bit of kind of bull flat sideways pullbacks in the Russell 2000. If we were to look at this from that standpoint and say, let's take that move and kind of put it right back down here and duplicate it, that's going to put the Russell 2000 up around the 3,111 range if that were a symmetrical movement. We really haven't seen a move like that. I mean, we saw this move right here that took 5 or 6 days, but that almost seemed somewhat reluctant. So could we go higher? Yes, absolutely. It could be that rotation back into the small cap. So we'll pay attention to that as we get into this discussion. A couple of other things I wanted to look at real quick. Let's pop over here to the VIX and just kind of see what volatility is doing overall. And volatility up from where it was yesterday, down a little bit on the day, so starting to bleed off just a little bit here. So market down, VIX down. That could be an interesting situation. Right? Spot down, VIX down can be an interesting scenario. Maybe backing off of some of that call buying on the option side that's been happening. All right. So the other area that I want to go to here real quick, let's go to our futures grid. And this is where I'm going to just move this to our left-hand side here. The area that I wanted to look at first really quick, and I think this is what's on everybody's mind, is /CL. You guys were talking about it out here in the chat. What's going on in the crude oil market? And this is kind of an interesting scenario, right? So we're looking at a one-year chart here of crude. I'm going to zoom in a little more closely just so that we can see this in a little sharper detail. But we talked a bit about this kind of symmetrical triangle that had been building, right? And we were looking at this approaching the bottom side of that symmetrical triangle. So for the question of, are we going to see movement back up to the upside in crude oil? Because we saw a pretty good drop over the course of the last couple of weeks, right? We saw crude drop from the top edge of this triangle up around 104 down here to about the 87 mark is where it kind of bottom ticked at that point. Now starting to see that little bit of a rise. Yesterday was kind of the off again, on again, but we saw about almost a 4% rise in crude oil yesterday. Now we're kind of seeing this backing off a little bit this morning. Once again, we're now at the 92 mark, but that's coming right at the kind of closing portion of yesterday's trading session. That candle body, we're kind of seeing that maybe acting as a little bit of a resistance. Now, that doesn't mean that it's going to stop there. And the news flow obviously has a long ways to go today, and that's what has been driving crude oil significantly, is that news flow, right? So is there a reason, and Rita says, why that open interest graph has some kind of a monthly pattern? So yes, there is. This is the /CL. This is what's referred to as the continuous contract. So Rita, good question to ask. So this volume and open interest chart that I have down here at the bottom, right, showing the volume being traded and the open interest in the contracts, that has kind of that cyclical behavior. That cyclical behavior is representative of the fact that if we go to the trade tab for /CL, we can see that we've got roughly monthly deliverables on those individual contracts. So each individual contract has an expiration date or a deliverable date in this particular case. And the volume and open interest, as you get close to that deliverable, for those that are not taking physical delivery, meaning the producers and consumers of the product, but those that are trading crude oil, to speculate on price movement, to hedge price movement, they're going to roll to the next available contract. So as this rolls to the next active contract, you're going to start to see that volume and open interest shift a little bit. It's going to roll to the next available contract. The way that plays itself out in the continuous contract, in this contract that we're looking at here, /CL, is that you get these what look like cyclical movements. So you get this big spike in open interest, and then it rolls off as you get towards that deliverable date, right? And so we could show this. So if we wanted to go to our trade tab, we see that our current active contract is /CLN26. So let's go back to the chart. We're going to put it in /CLN26. And you can see what that relationship is, right? You get that roll into, and then you can now start to see that open interest and volume starting to roll off as we're now getting towards the time at which uh, holders of the contract, speculators of the contract are starting to roll from one contract to the other. So that's one of the reasons why the Thinkorswim platform will always show the current active contract, right? So if we go back to our // CL, the overall continuous contract, you're going to see those dates. Now, this gives us a lot of other information though, right? And it shows us what that last trading price is, and we can just use that as kind of that mark. Um, we can see what those forward deliverables are, right? So we can see that there's still an expectation that prices are going to come down. That spot price is going to come down out towards those end of the year deliverables. But these have gone from 70 to, from the $70 range up to the $80 range. So those have gone up as well, right? So, yeah, exactly. I mean, so that's kind of the relationship. So the questions that are being asked, and this is some great lines of questioning. First of all, I wanted to point out the fact that Connie has reposted out there in the chat that there is a survey. So help us out, make this webcast better by filling out that survey. You can click on that link right now and set that aside, or you can do it after the fact, or you can jump back. You can wait till the end and you can click on it. I would love if you would just click on it, set it aside, then you don't worry about the survey going away. But Wacky says, kind of stagnation in the overall market. Not seeing a lot of movement one way or another. Maybe some stagnation, that fatigue that we were talking about. Dagan asks the question, is this the way that instruments react? Very much similar to crypto. Small news event or boom, we have a spike up or down. Yeah, and the markets kind of get that way, right? Absolutely. Yeah. All right. So a lot of different ways that we can view that. And great conversation. And I appreciate Connie helping out with that. All right. So let's do this. Now that we're taking a look at /CL, let's pop over here to our monitor tab, because in the monitor tab, we come down to our futures group right down here. And we still, at the moment, have this calendar spread that we have had on for some time. This calendar spread for /MCL, the micro crude oil futures, is a example trade. And again, remember, this is not a recommendation, but it's an example trade of being long one contract and short another contract at two different expiration dates. So we are short this contract, the /MCL N26, the most current, which is coming down to 16 days to go until its expiration or deliverable date. Being short, we benefit from the price of that contract going down. So if it rises like it did yesterday, that's working against us. Coming back down a little bit today, that's working for us. But we're also long that back month, right? We're long the December deliverable, in this case, out to 170 days. We bought that contract when the price of crude was $74. It has now gone up by $6.22. So we have made a little bit in that side of the contract, and we gained a little bit yesterday, or actually this morning, as this short front month has gone down a little bit. But we're now getting to the point where probably next week, next Tuesday, we're going to have to roll this off to the next contract, which will become the active contract. We're getting right down into that range where the volume and open interest and transactions are going to start to roll to the next contract. So we need to make a decision. Do we want to stick with this roll, or with this calendar spread, or do we want to maybe just leave that long dated 170 days out to go until expiration long contract to continue to appreciate if prices are going to continue to go up? If crude oil prices do go up, if they break through that diagonal trend line that we had drawn here, right, that we're kind of banging our heads against, then that's definitely going to give us a point where the holding on to that short front month is going to start to work against us, right? So Sam says, close that short position, right? And K Brown says, does that offset the short for buying power? Yeah, in the sense of margin relief, yes, it does give some margin relief because we are long one contract, we are short another contract. So the expectation is that those two are going to get closer together. The spread between those are going to get closer together. So the initial margin and the maintenance margin required is going to be a little bit smaller. All right, let's take a look though. There are some other. I'm gonna leave that one, and maybe we come back to that on next Tuesday, as opposed to getting short or rolling that front month off, because there were a couple of other things that I wanted to take a look at this morning that were moving pretty quickly. And one of those is /RB, and this is the gasoline futures contract. Whoops. Let's get to the right one here. Okay. All right. I know that one doesn't have a quote. /RB. This is the futures contract for gasoline. This is, again, the continuous contract. We go to the trade tab, and we can see that /RB, our active contract is the July deliverable. You can see that it is the most expensive of those contracts, and then it starts to get cheaper as we go out into the future. That is the normal kind of curve that we would expect to see. But again, this is influenced by geopolitical news. So we're starting to see maybe this little bit of a turnaround, right? So we've seen we've seen crude oil coming down. That crude oil coming down is lowering the input costs into refineries. RBOB gasoline is one of the things that's been coming out of the refineries. One of the other things coming out of the refineries is diesel fuel and distillates, heating oil, jet fuel primarily, and that's been much more expensive than gasoline. If you go down the street and you look at the gas pump, gasoline is cheaper still, even though it's expensive, cheaper still than diesel fuel. So refineries have been prioritizing diesel fuel, and that diesel fuel price has been reflective of that. But now I think maybe we're seeing a little bit of a shift as that driving season is coming into full force, and we see some greater demand, greater draws on gasoline supplies. This price may rise, this RBOB gasoline price may rise. We kind of have this little bit of a resistance level overhead, maybe looking at this as a little bit of a double bottom type of pattern here, RSI kind of bouncing up off of the bottom. So what I'm looking at is in the short term, we're kind of banging right up against this little bit of a resistance. So this is a 5-day, or excuse me, this is a 1-day 5-minute chart. So each one of these bars is 5 minutes. And you notice what's happening. I've got the ADX on here. This is the directional index, and it's basically a trend strength gauge, right? And so it's up in that 67 level. That's a really strong uptrend. And so we've seen this move to the upside. We're seeing a little bit of a pause here at this resistance level right around that 311 mark. But if I go back to this longer term chart, I drew in this resistance area right here at right around 316. So if I look at where 316 is, that's up here. So what I want to do is I want to put together a short-term trade on this /RB contract. If it breaks down below 310, I want to be out. But I want to get in on that break of the resistance level here at 311, and I want to get out if it goes up to 316. So short-term trade, trading and following this upside move if we get a breakout of this resistance level. So let's go back over here to the other grid and let's see what we've got. So our tick size in this contract is 0.0001, which means that this 8 in this price right now is our significant digit. Our tick value, when that changes, that's $4.20. Here's the reason why it's $4.20. There are 42 gallons of gasoline in a barrel of gas. So this contract is priced in barrels. That tick value is $4.20, reflective of the fact that there are 42 gallons in a barrel of gasoline. So we're talking about barrels of gasoline or barrels of oil. It's reflective of 42 gallons. I know this because I used to have a Chevy Suburban that had a 42-gallon tank. And it would take an entire barrel of gasoline to fill that tank on my Suburban. All right, so that tick value is 4.20, point value is 42,000. 42,000 times that 3.1185 gives us our notional value. If we click on the drop down, we take a look at what that /RB. This is going to be a pricey contract as far as initial margin to put up. So $10,392 initial margin per. So there is not, we don't have a /MRB or a micro contract on this, but we're going to look at some other micros here in just a second, Sam, for sure. So we're going to put that contract up. Now, that's the notional value. What we have to put up to initiate the contract or initiate the position is less than that. That's our initial margin. And yeah, K Brown, it was pretty close to that sometimes. If you stomped on the gas, it was pretty close to 1 gallon to the mile. It got better than that most of the time, but it was pretty close. All right, so what we're going to do is we're going to create an order here, and we're going to do a buy custom with OCO bracket, and we're going to talk through this. So I know that my breakout is at 3.11. So I want to get into this trade on a buy stop. I don't want to just put out a limit order. I want to put out a buy stop so that when it breaks out, I want to get into the trade. So now what I'm going to do is I'm going to adjust this, and I'm going to say 311.95. And I'm going to make that my buy stop. So I got to go stop. And we're going to make that good till canceled. 3.1195 is going to be my buy stop. Stop, wait, don't do anything until it gets to that price. Then enter the trade, right? Wacky. Wow, that is some obscure knowledge. Yeah, it was a 1995 3/4 ton Suburban. I'm surprised you know that. I'm not really surprised that you know that. Not by a long shot am I surprised that you know that. And then we're going to look at exiting this position if we get up to 3.1, I'm going to call it 3.17 to the upside. So we're going to take that as a limit sell. This says sell at this price or better, 3.17, and we're going to make that good till canceled. And then we're going to say, look, we want to get out if it goes the other direction. So if this goes down to 3.10, we want to be out of that trade if it goes against us. So let me label this really fast. Let me drop this down and we'll label this on our chart so that we know what each one of these levels is. Here's our target. Here's our entry into the trade. And here's our stop out of the trade if it goes against us. And again, remember those stops, stop that generates a limit or a market order, that entry, which is a buy stop that generates a market order, those are going to be worked as exchange designated limit orders. So we're going to go ahead and we're going to put this in. We'll fire this order off and we'll see if that order fills for us. It might. We're pretty close. We'll see if that moves. So we're going to put this in our futures group. We'll click on futures, click on send, and we'll wait for that circumstance. So the reason for waiting is we want confirmation, right? Am I explaining as a Wall Street insider? No. All right. It's interesting. Okay. All right. So yeah, Dagan asked the question, how would you, and ding, we just got in. Okay, now we are long. Now we are long this trade. We are looking for that upside move. And visually, this is what I like about doing it this way. And you can do it however you want, but I can look at this and I can say, look, now that I'm in the trade, this is my potential loss, right, in the trade, assuming that I get out somewhere near that stop. And this is my potential gain in the trade. So I'm not even worrying about, at this point, calculating that. I'm just seeing that relationship that I've got about a 2.5 to 1 reward to risk ratio in this particular case. So Sam says, well, $9,000 buy-in. Yeah, it's about $9,000 of margin that we have to put up. Because remember, we're not buying the contract so much or selling the contract so much as initiating a long position or a short position in the contract. And the way that we do that is by putting up that initial margin or that, and then keeping that maintenance margin as the trade continues to move. All right, so let's do this. Let's come back over here and let me put this on my group. And the other area that I saw moving this morning really quickly was copper and /MHG. I'm going to use the micro contract. The micro contract is smaller than the large contract. That's kind of the nature of the micro contract, is that it gives us a little bit smaller notional value, smaller initial margin. But some comments by Jensen Huang over the last few days in NVIDIA, in their earnings, as well as at some of the conferences that he's been at, have sparked some pretty good speculation and upward movement in copper prices. So this is the smaller contract. Let's pop over here really quick. Tick value, or excuse me, tick size 0.0005. So that 5 is our significant digit. When that moves, that's $1.25. When this moves from 6 to 7, that's 2,500. That means 2,500 times 6.6585 gives us our notional value. Our initial margin here into this micro copper future to go long is 1,320. So smaller initial margin to get into this trade. So looking at this from that standpoint, we're kind of making that move. I mean, two really big moves to the upside. RSI is continuing to move a little bit higher, a little bit of a bearish divergence, but nevertheless, some upward movement and not at an extreme. So still that possibility of continuing to make that move to the upside. Hammer-like candle here at this little bit of a level of support. So what I want to look at, if going back to the methodology here of close above the high of the low day, is close above the high of the low candle in this particular case. So these are 5-minute candles. Here's my low candle so far in this little bit of a pullback. We're going to look at this as a kind of that bull flag type of perspective. So I'm going to use this move. Whoops, let me my line tool real fast, and we'll put this trade together. I'm going to use this move right here as the flagpole portion of this trade. I'm going to right click and duplicate that, and I'm going to put it right about here. And that's going to give me my target, which is right up around where that resistance level is on the longer term chart. So just about the 6.72 range. There's some symmetry to this movement. Still got a strong trend going. So I'm going to look at entering this trade. Let's zoom this back out. I'm going to look at entering this trade on a candle that is above the high of this low candle, this hammer-like candle here. So where's the high of that candle? 6.6605. So I want a price above that level. Now that candle hasn't yet closed. So I want to look at a trade above that level, and I'm going to give it a little bit. So 6.6605. We could still have a higher high. This could still turn around. But we're going to build this trade in the interest of time. So I'm going to come in here and I'm going to right click right about the 6659 level. I'm going to right click and I'm going to do a buy custom with OCO bracket. Once again, I'm going to use this previous level of support as my stop level. So a break below that level, we're going to get out. And we're going to take this to a move up here to 6.72, kind of right under that resistance level. So while I'm thinking about it and I've got that number in my head, I'm going to put that in there as our exit at 6.72 is our target for this trade. Now we're going to get in at 66.15. That's let's see, 66.05. 66.15 would be 10 cents above the high of that candle at the moment. So 6615, and we're going to make that a buy stop. Remember, it says stop, wait, don't do anything until the price gets to that level. And then we're going to make our stop right down here, 6.63, 6.63. So we're going to bring it up from where that was, 6.63. That's where our stop is going to be to get out of the trade. Let me label this really quickly so that we remember where everything is. So our target is right here. Our entry is going to be right about here. It's going to be a little bit higher, right? So our entry is going to be right here, and our stop is going to be right here. And once again, visually, we can see kind of that risk to reward scenario that we're putting into this perspective. So now we're going to go back down here. We're going to open up that order, make sure that that's what we want. Confirm and send, read through the order, make sure that this is in fact what we want it to do. And then noticing our buying power impact or our margin, initial margin to get into the trade. And I'm going to come down here and I'm going to put this in our futures group, and we're going to go ahead and click on send, and we're going to fire that order off. And there we are. We're into that trade, and now we are long. Yeah, the stop. I could put the stop down here at low that day. I'm putting the stop kind of right here at where I saw that level of support, where it kind of banged itself down on that level a couple of times, right? So breaking below that level, Rita, I want to be out because that's going to give me confirmation that it's moving against me. But it is going long at this point to the upside. Couple of quick reminders, though. Connie's got that survey out there. So fill that survey out if you have an opportunity to do so. Just click on it, set it aside. It takes just a moment or two to fill out. The last one I wanted to look at here was /DX, and that is the dollar index. Now, I'm just going to say this. The /DX contract trades on the ICE exchange. Some of you may not have access to this, so you may not be able to see that on the platform, but you can go to the support chat and initiate a support chat and gain access to those contracts. There's a subscription fee to that. I'm not sure what it is. That's also something that you could call in and talk to one of your financial consultants at the branch network, talk to the trade desk, and basically get that taken care of. But what I want to do is I want to pop over here to /DX, and this is the dollar index. So let's take a look at the longer term contract. We've used this before a couple of times. We're starting to see the dollar strengthening a little bit here. So we've seen this big move to the upside, and then maybe this kind of sideways movement here. So we're going to look at this as maybe a little bit longer term perspective in this particular trade and going long this dollar index contract. Because what I'm seeing from a technical analysis perspective is we've been in this sideways movement. We had a pullback to the middle portion of this channel. If I were to extend that out, we had a double bottom type of pattern that has now broken out, pulled back and retested. And now we've kind of got this little bit of a descending triangle that's getting deep into the apex against a pretty strong level of support with that possibility of a breakout. So dollar index perhaps strengthening a little bit, some pretty good RSI numbers here. That's gaining some momentum. We're going to look at trading this to the upside, kind of in an intermediate term time frame. Now, there's a resistance level possible up here around that $100 mark, and that's kind of a structural resistance as well as kind of big psychological resistance, right? Trading the dollar index trading at par is or has been traditionally kind of that resistance area, psychologically primarily. So we could see a move back up to that point. So this breakout, pull back, same kind of thing, bull flag pattern, that break of that diagonal trend line. So I'm going to zoom in a little more closely here and say, look, our target for this trade is going to be up here right around 100. Our breakout is going to come here at 99, like 22 or so. And so we can put this trade together on a longer term basis. We can use this as kind of the shorter term chart as our basis for setting up the trade for our entry. So here's our diagonal trend line. It's right there at 99.18. This is going to be if this, then that type of trade, meaning if it breaks that resistance, then looking at entering the trade, else waiting. We could get in down here and trade that perspective right there. That's a little bit of a move, and we could do that on a shorter term basis, but I'm going to do this as a longer term trade. So my entry is going to come on that break of 99.18. So I'm just going to go right click, and we're just going to do a buy custom, and I'm going to put a stop in here as well, but I'm not going to put a target on it. So we're going to do a buy custom with stop, and my entry into the price into this trade is going to be a buy stop with a breakout of that 99.18. Okay, 99.18's buy stop, and I'm going to make that good till canceled. And then I'm going to put my stop order in here at 98.86. 98.86 is going to be my sell stop to get out of the trade. We're going to make that good till canceled. So this is going to be more of an intermediate term swing trade as opposed to that short term type of scalping trade that we were looking at before on those other contracts, right? All right, so and here's the other thing. If the dollar strengthens, that supports our case over in the crude oil contract of crude oil coming back down in our calendar spread. So this would be beneficial to that. Also, you know, if we're looking at copper moving higher in the short term, the dollar kind of making a little bit of a move to the upside may support the idea that rates are coming down, which may support the idea of more demand for copper. It all kind of interconnects, right? That's the cool thing. All right, so we're going to go ahead and we're going to put this order on, read through this order, make sure that we're aware of the transaction costs. We know that our initial buying power factor, our initial margin is 2,170. We're going to put this in our futures group. Now, there is risk in these trades, right? And the risk is that these trades go against us, and that is a possibility. But at the moment, at least the ones that we've entered this morning, the / RB trade, starting to come back on us just a little bit here, but we'll see how that plays itself out. The / MHG trade, our copper futures trade, that's working in our favor here. So we'll just keep these in mind and we've got stop orders in place. That's not a guarantee of where those are going to get filled. Remember, those are going to be substituted by the market for by the exchange for exchange designated limit orders. But there's still the possibility that those orders wouldn't fill if we got into a fast-moving market. So nothing in the futures world is set it and forget it. We've got to pay attention to those trades as they go, and we'll see how that works. And there's our ES trade. So, all right. Guys, real quick, let's pop over here. I wanted to show you one or two more resources. If you want more information about trading futures at Charles Schwab, just come over here to schwab.com/futures. That's going to give you that, take you to that futures overview page and give you some information about trading futures Schwab, as well as the markets that are available and so forth. If you want more information about trading futures, come over here to the Trader Talks webcast page. All that we ask is you click on that subscribe button, but just type in the word futures, 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 right, into the future. And now you're going to get the playlist for the futures webcast. You're going to get all of those webcasts that we've taught. And then if you want to join us for some of the other webcasts that we teach, click right here where it says live webcasts and virtual workshops. And you're going to see our entire lineup of webcasts. So my thanks to Connie Hill for helping out, and appreciate her helping out in the chat. I very much appreciate all of the conversation, and thank you for being here, guys. And thank you for being awake this morning and lively in this conversation. And my thanks to our great reviewers and our production staff. I will see you back a little bit later today for getting started with options. So we'll see you then. Take care, everybody. Bye-bye.